What's up, traders? My name is Layla, and welcome back to this week's no-nonsense market recap from Bullish Bear. Markets navigated a packed and volatile week as investors worked through the first meaningful wave of fourth quarter earnings, major geopolitical developments, sharp commodity swings, and early signs that parts of the economy may be feeling strain beneath the surface. Earnings season kicked off in earnest with big US banks setting the tone, and results so far have been solid but uneven. Bank of America and Morgan Stanley delivered upside surprises, while Goldman Sachs beat expectations and raised its dividend even as the stock struggled to gain traction. JP Morgan's report showed softer investment banking revenue, and Wells Fargo missed on the top line. Technology stood out as a bright spot this week, driven by blockbuster results from Taiwan semiconductor manufacturing. TSMC posted record earnings with profits jumping 35% and raised its outlook. Adding to the bullish chip story, the US and Taiwan announced a sweeping new trade pact expected to deliver $250 billion in investment into US chip manufacturing. Intel also stayed in focus after its CEO met with President Trump, highlighting the growing government support as the value of the US stake in the company has more than doubled. At the same time, the week offered a sharp reminder that not all sectors are thriving. In retail, Neiman Marcus's bankruptcy sent shockwaves through the luxury space and triggered broader balance sheet fallout. Amazon filed an objection to the Saks Global bankruptcy financing plan, revealing its $475 million investment tied to the Neiman Marcus deal is now effectively worthless. On the macro front, labor data provided some reassurance. Initial jobless claims dropped to 198,000, well below expectations and far under long-term averages, suggesting layoffs remain contained. Continuing claims edged lower but stayed elevated versus pre-pandemic levels, signaling that while jobs are available, landing one may be taking longer. Bond markets stayed calm with the 10-year Treasury hovering near 4.15%, reflecting comfort with slower but steady economic growth. Meanwhile, President Trump outlined a broad healthcare proposal aimed at lowering drug prices and insurance premiums, adding another policy variable for investors to track. Geopolitics also weighed heavy on sentiment, especially developments tied to Iran. Early fears of potential military action pushed oil prices higher. However, crude reversed sharply, dropping more than 4% at one point after Trump suggested an imminent strike may not be necessary. Those same geopolitical tensions, combined with questions around Federal Reserve independence, helped fuel a historic rally in precious metals. Silver surged above $92 an ounce to fresh record highs, extending gains of more than 26% in just the first 2 weeks of the year. All the while, gold also touched new peaks before both metals cooled later in the week. Bitcoin joined the risk-on trade, reclaiming $95,000 and briefly topping $98,000. Buzz around BitGo's expected IPO next week added to the crypto momentum. The message from the markets this week was clear: optimism is still alive, but selectivity is more important than ever as 2026 gets underway. For more updates, tune in next week as we continue to track the market's every move, and subscribe down below to Bullish Bear for more market recap videos. Until next time, stay disciplined, manage your risk, and remember, bears make money, bulls make money, but pigs get slaughtered. See you in the trading room.